Welcome to the March 27th, 2023 Advance Report for McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman, with your weekly fast-paced tour of the global financial markets. Thank you for tuning in. McGowanGroup Wealth Management, a team of 10 serving affluent families from the Crescent right here in Dallas, and we look forward to our brainstorming session with you. I bring you this week the banking crisis that's been in all the headlines, but I titled the show 2024. Why would I do that? I could get more clicks with the big old banking crisis, right? Well, in this case, 2024 is the most important set of projections to keep your eye on the ball and do great strategy during the year. So our investment committee meets once a week on Wednesdays at 8:15, and we meet quite frequently by email to insult each other for bad ideas and to reward each other for good ideas. Then we build a great portfolio, and we are focused right now on improving the portfolios. We've used this crisis to get clients to record income or near record income from real cash flow and install the very best bargains that will benefit for the next 3 to 5 years. So let's start with the banking crisis. Right about here is Silicon Valley Bank hitting the skids. Bank failures harken back to 2008, and everybody says, oh my God, the wheels are coming off the go-kart. Well, after Silicon Valley Bank, then Signature Bank, it was all taken over, and you could see the big drop in the Dow. The Dow had been up year to date. Now it's down about 3.5%. What gives? Well, the banking sector, and I'll show you just the regional banks here in a second, they were rocked by these two surprise failures. What was the problem? The Fed tightened so quick it made the value of their loans and bonds go down, and they didn't have the reserves to cover it when deposits went out the door. Well, it happens very quickly now on Twitter. People say, get your money out, and everybody ran. And that puts the Silicon Valley Bank was funding a lot of the venture capital firms, and a lot of them losing money. And nobody wants to loan money to a money-losing company, and they found that out pretty quick. But their big problem was Jerome Powell raising the short rates so high that the value of their treasuries and mortgages went down $10 billion, and the rest is history, or they are anyway. Well, what do we do now? First Republic Bank, they're trying to duct tape that together and get JP Morgan to take them over, basically. And in the meantime, Janet Yellen that she'll cover any deposits. And then she realized she didn't have the power to do that, so she backtracked and said, as needed. Well, if there's bank failure, we'll step in as needed and cover the deposits over $250,000. And that put an end to the scramble, at least temporarily. But Jerome Powell came out, and I'm going to show you what happened with Jerome Powell, because Treasuries, see, Jerome Powell's going two different directions at once, which generally, if your hands go one way and your feet go the other, you just fall over, which is kind of what he did this week, and we're about to cover that too. Anyway, that's the Dow. The low point in the Dow, 31,429. And we hit that last week. Week before last actually, and since then we've been sine waving around the 32,000 mark. It had been 34,000, and then we see the wheels coming off the go-kart for a few of the banks. Is that going to be a contagion? The banks are actually in much better shape than 2008, 2009, and the problem is not over leveraging in the housing market, at least not yet. So, and by the way, existing home prices year over year, median home price for median home price sales is actually down year over year. So if you're worried about inflation, oh, you get more to worry about here. Okay. Now, what should we be focused on? Remember, great assets that pay real cash flow that'll be worth a lot more in 3 to 5 years potentially. All right, so here we go with treasuries. Notice that the short treasury went almost to 5%. And at one point, the short U.S. Treasury, the 90-day, the 6-month went all the way to 5.25. Now look what's happened. Boom. The T-bill this week, the 90-day T-bill, which usually follows Fed funds rate, Jerome Powell says, I'm going to 5 anyway, even though I killed a few of my clients, because his clients are banks. He said, I'm going to go to 5 anyway because I don't want to admit that I went too far too fast. And we're going to keep tightening. But at the same time, he provided $300 billion worth of liquidity, even though he's tightening. He provided $300 billion worth of liquidity to primarily the banks. Okay, so that's moving 2 different directions at once. What that tells you is the Fed tightening cycle is no longer the big news. The markets were tortured for 15 months intentionally by the Fed because they don't want the wealth effect. Everybody goes out, buys a fancy new car, you get inflation. Well, they wanted to tamp inflation down. The 8-month inflation rate, and we've covered this before, if you look at producer prices and consumer prices, for 8 months, the inflation rate annualizes between 2 and 3%, about 2.5%. For both measures, that means 2/3 of a year, you really hadn't had significant inflation, okay? So, the Fed tightening cycle likely completely over at this point because he's already starting to do damage. Well, what happened here? This is the 10-year Treasury. What's the 10-year Treasury doing at 3.3 if the overnight bank lending rate is 5%? Why would you accept less for 10 years? The reason is the Treasuries are forecasting by 2024 that we're likely back to normal. What's normal? 2 to 3% overnight bank lending rate, 3 to 4% on long Treasuries. That's what that appears to be forecasting. Yes, it could be forecasting severe recession. We've been hearing the word severe recession for over a year. And I'm going to give you some news on that in just a second. Are we in a recession? Hold that question. Got a couple more things to come. This is Deutsche Bank on Friday. It was down 10% in a single day. Big German bank, and they're very active here in the U.S. They got an office right down the hall here at the Crescent. Anyway, they're down 34% from their high, sitting here at $9. And there hasn't been any news about any problem at Deutsche Bank. So I don't know why they became the latest hobgoblin, caused the Dow to go down 300 points on the final trading day of the week, and then it rallied back to about 32,000. So these are the regional banks, and you can see with the SVB collapse what happened to the regional banks right here. My buddy at Wells Fargo in commercial lending, he said they had a triage unit to open new accounts because everybody's moving their money around, so they got a lot of new accounts out of the deal. Anyway, he's not seeing any defaults. And that says, wow, it's pretty healthy from a commercial lending perspective. That's good news. Anyway, they're down 29% for the year. So a big part of the damage to the indexes happened, yes, here, and it may be an opportunity because oil prices went below 70 because everybody's scared of a recession now. They do that every time. They genuflect by about 10% every time it looks like, oh, there could be a recession. And we've been doing that dance for a while. Goldman Sachs lowered their forecast to say oil at the end of the year about $90 because production won't meet demand by the end of 2023. That's important. And so we've increased our allocation to the energy infrastructure and other great blue chips that we bought at that low point you saw week before last. Okay, here we go. Recession. Not now. This is the first quarter. Real GDP now by the Atlanta Fed. They go out every week and they gather up all the data from around the country. Last quarter, the learned economists in Bloomberg were saying 0.2% economic growth for the fourth quarter. Atlanta Fed said, no, looks like about 3%. Well, the Atlanta Fed was right. Why? Because they gathered the data weekly instead of making stuff up. 3.2% first quarter GDP growth right now. We're at the end of the quarter anyway. Guess what? They actually have the best measure and the quarter's almost over. And they're saying, no, things are actually pretty darn healthy. So if there is going to be a recession, it's not here yet. And if it doesn't happen, too many people are way too pessimistic, which adds a lot of bargains. So if you want to upgrade your portfolio, get the team that cares on your side, you go to networthradio.com. Right there is a contact us button, and that'll result in a great brainstorming session either by Zoom or in the office if you want the office tour. This is a great team to work with. I know every one of them, and I can vouch for the fact that they're smarter than I am in at least one or two areas. I'm Spencer McGowan, your financial weatherman, president, McGowanGroup Wealth Management. Thank you for joining us. Be sure to subscribe, and if we deserve it, do a like, because the team works really hard on a quick weekly broadcast to bring you up to speed. Thank you for tuning in to Net Worth Media today and our efforts over the past 2 decades to educate clients and help clients make great decisions. That's the reason that we're here at YouTube McGowanGroup, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowanGroup Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the Net Worth Media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowanGroup Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.